Welcome to the SpreadX weekly financial preview. We're looking at Berkeley Group, full year results on Wednesday, the 20th of June. What should we expect? What can traders expect?
Yeah, it's interesting. Berkeley Group had a very strong year. I think they hit all-time highs very recently around the £43 mark. It's pulled back a bit since then. It's at just under the £42 mark, but still very, very high. What's really interesting is that most of that growth has come after its March meeting, sort of in the months that followed. Despite that March announcement not being particularly great, I think it has said that it was unable to boost production beyond its current business plan levels, and that was sort of taken as a read on the entire sector, given that Theresa May had wanted, the new target for home building in the UK was 300,000 homes a year. Berkeley Group, one of the biggest house builders in the country, the fact that they're saying they can't up production due to a mixture of issues, namely things like rising transaction fees putting off buyers, a drop in buy-to-let customers, which would normally be their sort of like early steady cash flow for them to invest in more ambitious growth plans. Issues like that are preventing it from upping production to the way the government, I think, would want, and did sort of spark a ripple of concern throughout the rest of the sector. However, since then it did continue to rise, I think, largely because it said it's still on track to deliver the £3.3 billion in pre-tax profit as promised between 2016 and 2021. I think its half-year point back in December, pre-tax profit was up 36%. It's consistently hitting those sort of £500 million pre-tax profit sort of target every half year to a year. I think that's sort of why investors have kept on board, because of sort of that looming payout every time it gets to one of these big announcements. In terms of its full year figures on Wednesday, I think it needs to basically reward investors' faith in the company and deliver another sort of big double-digit jump in pre-tax profit. And I think, and also to sort of just, reassure investors again that the company is still on track despite posting a fairly bearish halfway point update earlier in the year. In terms of our clients, sellers have started to creep in around the £43 mark. I think it is in a slightly precarious position because you're going into full year results off of a fairly bearish update in March at all-time highs. So that, there is potential there for it to pull back. So I think that's why we have seen sellers creep in, but not in huge numbers to suggest any huge drop, but just enough for it to be wary about it. Heading into the full year figures on Wednesday.
Okay, thank you very much.